Episode 4. Trade Finance Documentary Collections and Market Risk. Contracts are signed. Goods are shipped. But markets do not stand still. What happens when prices change after shipment under documentary collection? Northbridge Sample Exporters ships steel coils to Harborview Sample Importers. Payment term. Documentary collection, DP. Documents are on the way through the bank. The vessel is at sea. The market shock. Suddenly, global steel prices fall. By the time goods arrive, the market price is lower than the contract price. Harborview hesitates. Under DP structure, documents against payment. The bank releases documents only if the buyer pays. But the bank has no payment undertaking. It simply follows collection instructions under URC 522. The critical question. If the buyer refuses to pay, does the bank pay the exporter? No, the bank is not responsible for the buyer's commercial decision. Real consequences. If Harborview refuses payment, goods remain at port. Storage and demurrage increase. Exporter must resell at lower price or re-export goods. Market risk becomes payment risk. Now consider DA, same shipment, but payment term is DA. Documents are released against acceptance of a draft. Buyer takes the goods. Payment will happen in 60 days. Market falls before maturity. If prices collapse after acceptance, buyer already has the goods. Exporter now carries credit risk until maturity date, unless the draft was avalized. Avalization impact. If the collecting bank avalizes the draft, the bank adds its undertaking to pay at maturity. Now risk shifts from buyer credit risk to bank credit risk, subject to approval and credit limits. What this teaches us: documentary collections do not eliminate risk. They control documents. They do not control markets. Price volatility directly affects buyer behavior and payment decisions. Strategic insight. Under collection, risk allocation depends on payment type, D, P or D, A, market conditions, buyer financial strength, whether avalization is added. Structure must reflect market reality. Closing thought. In international trade, the shipment may be smooth. The documents may be correct. But if the market moves, risk reappears. Under documentary collection, banks facilitate, they do not absorb market risk. Soraya, the handling bank officer, explains. People focus on the documents but often overlook the power of the draft. The buyer's legal obligation arises when the bill of exchange is accepted. But what makes a draft valid? What happens after acceptance? And how does it shift the risk dynamic? Follow for episode 5. Draft, bill of exchange, structure, elements and how it works. Walk with me through 3 decades in trade finance, from the basics to real stories.